Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today we have Shweta Rajani, Head Mutual Funds, Anand Rathi Wealth. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on the Money Show at etnow.tv. Hi, good evening, Shweta. Welcome to the show. And we have our first viewer, Rahul Sharma, on the phone line with us. Rahul, hi, good evening. Thank you so much for sending us your query.
Thank you.
Okay,
Thank you for taking me.
All right. So, tell me one thing. You want to know about various asset classes and their historic returns.
Right.
Right now, do you have any investment portfolio across these assets?
Yes, right now I'm investing in stocks and various mutual funds, but I'm a little, less enthusiastic in gold. So I just wanted to
Okay.
know, like, what is the historical returns of the gold, so that whether it would be a wise decision to, start investing in gold.
Okay, so based on historical return, you want to decide if you can invest in gold or not. Otherwise, you have a portfolio in equity, which is stocks and mutual funds.
I'm an active investor also. I mean, in stocks, also through mutual funds.
Okay. Okay, all right. So the concern is you want to have more returns than fixed deposit by
That
investing
is
in
right.
gold as well. Yeah?
True.
Okay. All right. Interesting question. But I hope you have adopted a strategy where you have aligned your goals and you have asset classes aligned accordingly with your financial goals.
Yes. I've already done that, but I just wanted to know that whether I just wanted to ensure that I'm not going anywhere wrong.
All right. You sending your portfolio would have been really helpful, at least the mutual fund portfolio. But then, because you don't have that information, let's just stick to what's been asked, Shweta, over here. So, as per the rule, when it comes to diversification, it's important that you are invested across asset classes. But how important it is to look at historic returns, especially for an asset class like gold, where in the long term we use it as hedge against inflation. It's also a safe haven. It is important to have gold, but in the right form, which could be investing through a sovereign gold bond or a gold fund or a gold ETF. How would you like to decode Rahul's mindset of looking at historic returns and then investing in gold?
Sure. Good evening, Kavita. Good evening, Rahul. So, coming to your question, of course, I will share what the past performance has been, but just two, 3 points before that. Your investment decision cannot be solely based on the past return of an asset class, or for that matter, a security or a product. You need to evaluate the risk, liquidity, future potential of that investment, and then see, is it helping you to achieve your financial goal or no? So that should be your decision making point. Past return can be used as one reference point. It cannot be used as the sole decision making point. I'll first address your question. So if I look at equities, and if I break it up into what Nifty 50 would have delivered over the last 15 years, it's around 13.5%. If I come down to mid cap, small cap, those returns have been around 19-20%. If you talk about FD is giving you around 7.3, 7.5%. Gold 15-year return has been 9.5. Debt funds would have been around 8%. If I look at real estate, and I'm looking at NHB index by RBI that gets published, it's a national housing index that shows real estate return would have been 4%, but that's generic. Real estate depends from one property to another property, whether it's residential, commercial, so it may not give you a true picture. So that's the historical performance. One thing on gold, and Kavita also highlighted, it becomes important as to what is the form of investment. You have to understand that gold, while it's said to be a hedge against inflation, if you also check the volatility, which can be measured by standard deviation, the standard deviation of gold is very similar to equity. So while historically, it's assumed that gold and debt would be asset classes that you can use to bring down the risk of the portfolio, to bring down stability, to bring in stability and bring down the equity risk. Gold may not always fulfill that criteria to your portfolio. So if I have to choose, between the two protection asset classes, gold and real estate, I would suggest you go for, between gold and debt, go in for debt. Looking at the current interest rate scenario, what you can expect from debt is anywhere between a range of 7.5%, right? Not looking at history because your interest rate scenario was different at that point of time. So going forward, expectation should be from debt of 7.5, with minimal credit risk. So I'm talking about GSEC-like investments. If you talk of equity, the way we're seeing the economy growing, and where the corporate earnings are growing from equity, you can expect, with Nifty 50 delivering somewhere around 11% return. So your portfolio, which would be a combination of funds, stocks, to easily give you around 14-15% kind of a return. That should be your return expectation from each of these asset classes. Have a good mix of equity, debt. You can easily avoid real estate, and gold would be my recommendation to you. And what proportion? It depends on what's the financial goal you have and what's the return you're targeting for your portfolio.
Right. In-depth explanation, Rahul. Is there anything else you want to ask Shweta?
Shweta really explained well. Thank you so much.
All the best. We move on, and next question, Shweta, for you is from Ahmed, Andhra Pradesh, and he has HDFC mid-cap opportunities, Kotak Emerging Equity, Parag Parikh Flexi Cap. He has Quant and Nippon Small Cap, and he's been investing via SIP, and the time horizon he's looking is actually 15 years.
Yes, Ahmed, I'd seen the question and the funds, what you're investing. As far as I remember, you've been investing 20,000 per month as an SIP. If you're looking at a horizon of around 15 years, this would easily take you to a value of 1.1 to 1.2 crores over this time horizon. So continue with your SIP, and I'm hoping it will help you achieve your goal. Coming to your schemes in specific, you have two mid-cap funds, Kotak and HDFC. They are good. You can continue with them. You have a Quant small cap. That's again a good fund. You can continue with. Two funds where I would suggest some changes. The Parag Parikh Flexi Cap fund. This fund has some portion of international exposure, but the way we are looking at Indian economy versus a lot of the global peers, Indian economy is poised to fare far better than a lot of these international equities. So invest in a fund which is pure domestic equity, right? So you can go in for an HDFC Flexi Cap. Second, on the Nippon Small Cap Fund, this fund has been a good performer in past. However, today it has a size disadvantage. It's crossed 30,000 crores of AUM. If you see the underlying stock exposures going on increasing with each passing month, so that's a disadvantage to the fund. So I would suggest these two funds, something that you should exit from the portfolio. Instead, you can look at building in through the multi-cap route. So you can look at a Kotak multi-cap fund. You can bring in an SBI Contra fund, a different style to your portfolio. And that will also bring in some market cap diversification.
Wonderful. Let's move on to our next viewer, Shweta, quickly. Dakshina's question, and she wants to invest in an ELSS fund, and she also wants to understand if a time horizon of 25, she is 25 years old and she wants to invest in an ELSS fund. Okay, so top ELSS recommendations, Shweta?
Dakshina, I'm just hoping that you're looking at ELSS only for that 150,000 rupees that has to go in every year to give you a ATC benefit. If that's the criteria, then you can go in for an HDFC tax saver. That's a good fund. You can go in for an SBI tax saver or a Mirai tax saver. And if your purpose is not ELSS, then my recommendation would be to go in for pure diversified funds where you don't have a 3-year lock-in. These funds have a 3-year lock-in.
Okay. Shweta, could you also explain whether you should be investing lump sum in an ELSS fund or via an SIP? Because there's a 3 years lock-in. One needs to keep in mind there'll be a lock-in for every SIP installment.
You're absolutely right, Kavita, that if you're investing in ELSS, right, because there's a 3-year lock-in, it's recommended that you put lump sum. Because if you do an SIP, what it means is that your last installment also has to stay for, a 3-year tenor. So your average investment holding period would not be 3 years, but it gets extended to somewhere around 3.5 years. So go in for a lump sum of a year.
All right, let's move on, and we'll take Somasri's question, and she wants to invest for her daughter and niece, and they are 2 and 8 years old respectively, and she wants to understand how much amount can she invest, and investment horizon is long term definitely. So we don't have a lot of details because we also wanted to understand as to what's the kind of amount she's comfortable with. But then, as small as 500 rupees, so much you can start your investment with. But I think, Shweta, you can help with the fund selection over here, and also help Somasri in understanding what's the kind of corpus she wants to accumulate and how, basis on that, she can decide her SIP amount.
Sure. So Mashri, I'll first talk about the investment corpus. If you're looking at 2 years and 8 years children, then you're roughly looking at around 15 years by the time they would reach their stage of higher education. If I look at the cost and I inflate it a little, you would probably need 25 lakhs for each child. So you'll need 50 lakhs for their education purpose over the next 15 years. So what you would need is an SIP of 8,000 rupees. To get to that 50 lakhs over the next 15 years. Talking about their marriage, because that would be another goal. I'm guessing you'll have 25 years approximately to reach that. Again, taking just a rough corpus of 50 lakhs that you may need, 25 lakhs for each child. Considering your investment horizon is 25 years, your 2,000 SIP that you do would help you get to that corpus. So if you can, then my recommendation would be to start with a 10,000 rupees per month of SIP. That will give you, put you in a comfortable position. What you can also do is, as and when you have money, go in for some lump sum investments too. Coming to funds, I would suggest that you have a portfolio which would be of 4-5 schemes at least to start off with. And then as your horizon, as your funds increase, you can also increase the number of funds to the portfolio. My fund recommendation to you here would be to go in for a Quant Active Fund, an Aditya Birla Small Cap Fund, an HDFC Small Cap, Kotak Multi Cap. Since you have a longer time horizon, you can have approximately 50% in mid and small to your portfolio, and these funds in an equal proportion will help you get there.
Mm-hmm. All right, with that, it's a wrap. Thank you so much, Shweta, for being on the show and helping our viewers with their financial portfolio queries. And time to sign off, but then